For more perspective now on the electric vehicle industry and BYD's place in it, let's bring in Lauren Fix. She's an automotive expert and the editor-in-chief of Car Coach Reports. Welcome to the show. Thanks for joining us. Now, let's start with the earnings. BYD expected to report record revenue for the fourth quarter on Tuesday. What's behind this boom?
Well, there's been a boom because the Chinese people would prefer purchasing product produced in their country, owned by Chinese companies. Tesla has been producing product and was the leader in the marketplace, but BYD has had increased growth. It looks like they're going to have about 213% growth, which is huge. Usually, most companies would dream to have that kind of growth. But they've also expanded into commercial trucks, and because their expansion into Europe and going into Brazil and expanding that footprint, that's going to be very good for BYD. I expect that they'll have very good numbers.
But there have been some questions about sales early this year. They've dipped. Why is that?
Right. Well, there's a couple of things. Of course, we're dealing with sales right now in the U.S. We're having huge impact everywhere across the world is with recession, the cost of the dollar. But in addition to that, you've got the cost of lithium. Now, that tends to be there's a shortage of lithium, but there's other rare earth minerals. There's 7 of them, and they're very expensive, including cobalt. And because of that, even though China owns about 70 to 80% of the mines that are out there, still the cost of those materials, even if you start lowering the cost of the vehicle because you're having a price war, then the profit margin is less. If the profit margin is less, then you have less cash flow in order to pay your employees and expand your business.
What about the workforce changes for BYD? They're reducing shifts at 2 of its plants. Is that also having an impact on the sort of slowing sales?
Well, sure. I mean, obviously, there's all connected as one. If things get more expensive and you have to also lower the price in order to compete with Tesla and other car manufacturers, because others have also dropped their price, such as Polestar and Volkswagen and Ford, then in order to do that, then there's less profit margin. In other words, what they're selling it for and what it costs, that number decreases, that cash flow reduces. So the result is less people, less shifts. Obviously, they'd like to sell more, and they probably will by the end of the year, but there's a lot of other outside global forces happening at the same time.
So let's talk about the pricing war between Tesla and BYD. What kind of impact, apart from what you've just mentioned, is it having on the industry in terms of competition? Will it continue, and what does it mean for consumers? Are people more able to afford electric cars now?
Well, here in the U.S., the average price of an electric vehicle is about $66,000. That is not your average price of a vehicle, which is just slightly under $50,000. So what that means is Tesla lowered their prices in order to meet the fuel economy standards, in order to get the EV tax credit. So they did it globally. And when they did that globally, it forced BYD and other brands to lower their price, because if they didn't, Tesla would then pick up the sales for any potential customers. So you're seeing other manufacturers doing the same thing. Other Chinese suppliers, as well as Polestar, Volkswagen, and Ford, and many others are saying, and Toyota's even thinking, we're going to have to reevaluate our electric vehicle plan, because obviously, if you want to play in this marketplace, you have to come in with a very much lower price, which means, again, less profit margins. And they want to sell as much as they can. But right now, there really isn't a lot of car manufacturers that are making a profit at all when it comes to electric vehicles, because of the overall cost of the rare earth minerals that go into making the battery and all the components and parts.
Now, BYD has big global ambitions. Let's start with Brazil. What does this investment mean for the region in general, but also for China in terms of BYD?
Well, it's excellent for Brazil because obviously it's going to pick up some more people that are working. Employees are important. It's good for the economy of Brazil. Right now, they're about 2.4% of the market share. They want to increase to 10% of the market share by 2024. And by taking over an old Ford plant, that's actually quite smart. The plant already exists. They can work with some of the tooling and things that are left behind, if not create their own. But they plan to go to 30% of the market by 2030. And that's huge. And of course, then expanding into Europe and other countries, potentially even into the US, more so than they already are in the commercial side. That's going to make a big difference for the company.
So what other countries are BYD looking at in terms of targeting their next ventures?
The next ventures we're hearing is Europe, that they're looking at expanding into. Of course, I don't have any inside track, any information directly from the insider, but we're hearing they want to expand into Europe and start competing in that marketplace. Because remember, they're going to compete directly head-to-head with Volkswagen and Polestar, which Volkswagen has a big piece of that property as far as in Europe, and so does Tesla. and they want to compete with Tesla head to head wherever Tesla is, they want to be.
Right, brilliant to get your insight. Thanks for that, Lauren. Lauren Fix there, automotive expert and editor-in-chief of Car Coach Reports.